So I'm recording. Yeah, I'm recording the session. So, all right. So yesterday we looked at market structure. We looked at price creating high highs, high lows for an uptrend, and then price creating lower highs and lower lows for a downtrend. And we identified impulsive moves and then retracements. And we usually retracements are just pullback. So when the price has moved impulsively, signs it needs to re it needs to relax. It needs to rejuvenate and gain some strength before continuing its move. Okay, so that's what the retracement gives us. And then we also looked at trend lines, and then we established the rule with the trend lines in drawing our swing points. So we identify that the swing points are major points in a structure. So the swing points are a swing point is the lowest point or the highest point in a structure. So when you look in this picture here, you can identify that this was the highest point price reached before the retracements. So we identify this area as a swing high, and then this area as a swing low, because this was the lowest point price reached before the impulsive move began. So so today we are going to look at one aspect of retracements. So you know how candlesticks coming together forming the retracements. Now we're going to look at one candlestick retracements, okay, and how to look at that. So we're going to use the candle wicks and the candle ranges, and then right after we'd go into supports and resistance. Yeah. Okay, so let's get into the chart, and then let me show you. Okay, so okay. Okay, so I'm not finding what I'm looking for here. Anyways, so when we go into the charts, we've established or identified that the wick, or when you look at a candlestick, we're basically looking at four parts. Okay, every candlestick has four parts. It has the high, it has the low, it has the open, and the close. So if it's a bullish candle, it means price closed above the open. Okay, and then if it's a bearish candle, price closed below the open price. And then inside the candle we have the wick, or some call it the shadow. Okay, so the highest points that price reach in that particular time. So I'm highlighting this particular candle here. And you can see the candle was formed on Thursday that was yesterday, so 22nd May 2025 at 3:15. I think this should be AM. Yeah, so at 3:15 a.m. So that was during the Asian session, right? This candle formed here, and this is a bearish candle. So this is the open, this is the close, and you can see there are no wicks below it. So it has no wick below it, but we have an upper, and we have an upper shadow here. So now what we're going to look at is this. Price moves in waves, right? We established that yesterday. When price is going up, it goes up impulsively, retraces, goes up impulsively, retraces, goes up impulsively, retraces. And sometimes you can have one candlestick just causing the retracement, because when the impulsive move is strong, or when the when the impulsive move is strong, Or when, so for instance, if you're on an uptrend and then there's strong bullish momentum, sometimes sellers do not even have the chance to push price all the way down. Like you can't, sometimes you wouldn't even see multiple bearish candles coming together, right? So what we sometimes could get is just a one candlestick retracement. So let's look at this, right? You can see the candlestick here. Now, this is what I need you to understand. Whenever the price is going up, it means price would be breaking the previous candle's high. So right here, price broke this candle's high. So let me zoom in. Yeah. So you can see price, whilst it was going up, price broke the candle's high. It didn't come down. It didn't break this candle's low, but this candle here broke this candle's low. Okay, so it broke the low and then broke the high as well. So it's okay, so let me say it swept the low, all right, because it didn't close below it. So it swept the low and then broke the high. So this sweeping here, this is a down move. When you look at this, is when you go to a lower time frame, you see this as a retracement move, because you know when price is going up, it's supposed to be creating higher highs and higher lows. Okay, so even the candlestick, the high and low of a candlestick are also they are also swing points, because if you look, let's go to the weekly time frame, and then I'll highlight one candle, and then you see how many candlesticks can even be in one particular candle. So okay, so let's use this weekly candle here. Okay, good. So I've highlighted that, and then let's go to the 4 hour. Okay, so now we're on the 4 hour. Now you see, so this one, so this candle here is like a doji. Okay, so the wick, I mean, it does a reversal, or it's a candle that indicates reversal, shows reversal. So that's like a doji, right? And now when we go, and it's one candle, but when we go down to the 4 hour, we see a lot more candlesticks inside this one particular candle. What does it look like? It looks like a bearish, some sort of bearish. So here it was going up, all right, and then at the end, where the candle was about to close, it closed below this. Okay, so actually, yeah, so yeah, it somehow closed below. So it came all the way down, went up again, came down, went up, came down. So this number of candlesticks, this 4 hour candlesticks, these numbers of 4 hour candlesticks form just one weekly candle. Okay, and if we go to the 1 hour, it will be a lot more candlesticks, and then blah 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 blah. So that's what I'm trying to say. Even the high, so now let's look at the high and low of that particular candle. Okay, so let me use this tool. So this is the low of the candle, and then this is the high. Okay, so if you're looking at it as swing points, we can identify as, it means that our swing points probably started from here. Okay, so it probably started from here. So this is the lowest point. You see, so this is the lowest point the price got to in that particular week, and this is the highest point. So it's a swing point, because you know when you even look at it as a down, like at this level from a downtrend perspective, you can see that here is the swing high. So we mark this area as a swing high. Yeah, so we mark here as a swing high, and then the swing low. Okay, so every candle's high and low is a swing point. Okay, so that's what I was just trying to establish here, and that's why when price breaks or sweeps a candle's high or low is very important. It's very crucial. If we're in an uptrend, we don't expect that price should be taking out the lows of candlesticks. So there's an uptrend here. Let's look at this, for example. So there's an impulsive move, a retracement, and then an impulsive move. Beautiful. So if we start marking from here, you can see, okay, let's just look at the candlesticks and analyze them. So from here you can see this bullish engulfing, beautiful. This is the high, this is the low of the candle. Now what happened? Price price did not take out the low. Since it's an uptrend or since it's an impulsive move, price was going up. So it took out the high instead. Okay, so this was a sweep. It didn't close above the previous candle's high, but it's still showing bullish momentum because it hasn't taken out the low. So now we keep going. So the next candle, what happened? Same thing happened here. This candle here took out the candle's high, not the low, which means we are still going up. Okay, so let me delete this. Now this candle's high to got taken out here, or this candle closed above the previous candle's high. Okay, which shows an uptrend. It means price is still creating higher highs and then higher lows. So if you even look at this here, this is like a little retracement, okay, because it means price came down a bit before going up. Do you understand? Little retracement, and then so let's look at this candle here. Same thing. The high got taken out, or this candle here closed above the previous candle high and not the low, which means we are still going up. If you go to the lower time frames, you see probably like you see a beautiful uptrend. You probably see price moving in waves. Let me use so when you are looking at this structure here, or this impulsive move in the lower time frame, you probably see price moving like this in the lower time frame. Okay, but on the higher time frame you just see one candle, and we've already established that. We looked at the weekly time frame candle, the doji, and we identified all these candles inside. Okay, so now we are on this candle. Okay, so what happened here was this particular candle. What happened here was price was between the high and the low. You see this candle here, this particular candle here, did not close above or below. This candle's range was inside the previous candle's high and low, which means price had not yet taken out the higher high. So if we even decide to mark this, let's just mark this and look at the type of structure and the lower time frame it could give. Okay, let's say the 30 minutes. Okay, so it should be somewhere here. Okay, so 30 minutes. Now we should see. Beautiful. So it's here. Now you could see the high and the low. Now let me draw that out. This is the high, right? That's the high of that particular previous candle that we're looking at, and this is the low. Let me use I think the low should be this or this. Anyways, now you can see this whole range here. All these candles here, it didn't close above or below. This is the move that happened. This was the move inside. So you can see on the 4-hour time frame, you didn't get that bullish candle closing above or below, which means it's not a valid retracement. Okay, because if you want to say the move, or if you want to identify or classify like a move as a retracement, price would have to take out the low, which would identify that is going down. You get? So let's go back to the 4-hour, and then we would identify a candlestick retracement, because that's what we are looking at today. So I'll take this line out, and then we keep going. So we see, so it kept, okay, so later on, so this candle here didn't close above. This candle didn't even close or sweep the previous candle's high, but the next one did. This particular candle here closed above it, and then the next one also closed. So this particular one also closed above it. Now what happened here was this bearish candle closed, so it didn't close, it swept the high, but it closed below. So now this here is a down move. Okay, so this is a down move because price has taken the low, or price has um yeah, basically price has taken out the low of the previous candle. So that is a retracement. This is a down move. Okay. The same thing happening here. This candle here was lurking between the high and the low of the previous candle. So it didn't even close. So you can't even identify this as an up move, because it didn't take out the previous candle's high. I mean, you can look at it as an up move because yeah, you can see the some sort of price action inside the range. But when you go to the lower time frame, since price hasn't really done much, you might not even be looking at it. So we keep going. Price later on, this candle here sweeps the low, still going down. Then it went up a bit because it took this candle's high over here. So you can see this candle here swept the previous candle's high, which means price went up a bit. If you go to the lower time frame, you see some sort of bullish momentum here before price later came down, closed below. Okay, and then it came all the way down. Now this candlestick here, so this is where the retracement move ended. Okay, so we identified this as the impulsive move, then the retracement, and then the impulsive move again. Okay, so that's basically it. That's all. I just wanted us to look at candlestick retracement. I mean, later on in the journey, when we start looking at the strategy and identifying highs and lows. So yes, so all these candlestick retracements, I identify them as highs and lows. Okay, so if I look at something like this, I can identify this as a high. So if I want to draw the structure for this, I can draw it this way, because the candle closed above, so I can just draw it. This came down, then it went up before coming down again, and then okay, so when I take this out, now you see, so this is exactly what happened, okay, before going up. So even though it was just a candle sweeping the previous candle's high, it's still a retracement for me, okay. And then it came down, closed below, or swept. Basically, price came below the previous candle's low, so that's why I drew it as a down move before the impulsive move kicked in again. If I got this candlestick here sweeping this previous candle's low, then I would have drawn my up movement like this, and then a mini retracement because it takes out the previous candle's low. Okay, so that's basically it. Once it takes out the previous candle's low, in some other time frame, you might probably see a change of character, because if this is an up trend or this is an up move, it means price is supposed to be, in an uptrend, price takes out the high highs. Okay, so in an uptrend, price takes out the high highs. So in an uptrend, price takes out the high highs and respects the lower lows, which means if all this move here was supposed to be one candle, the low of the particular candle will be respected. Okay. Is okay. Oh, my bad. Okay. So what was I saying? Okay. So I was saying that if this whole move here is supposed to be one candle, then the low of that particular candle would have been respected, and then the high would just be broken. So that's when let me go to the chart and then look at that again. So you can see it here. This is the candle's high and this is the candle's low. Okay, and then the next candle close above it, which means an up move. Close above it, still up move on an uptrend. Close above, didn't take the low, so the lows are being respected. Then here we can identify this as some sort of retracement. So let me highlight this, and then we jump to a lower time frame and look at how
Can you explain how that's kind of a retracement?
this.
Yeah.
Okay, so when we take a candle, right? So we're looking at the high and the low, right? So every candle has a high and a low. That's the range of the particular candle. So and we identify that in one particular candle, when you go to a lower time frame, you could most likely see a lot more candles. So maybe for a 4 hour candle, if we highlight just one 4 hour candle, we would see 4 1 hour candles, because 1 hour candles would have to be formed 4 times to form just one 4 hour candle. Makes sense, right? Just the same thing here. If we highlight one 4 hour candle and we go to the 2 hour time frame, you'd see just two candles, because two 2 hour candles will give you one 4 hour candle. So in here, same thing. If so, basically this same 4 hour, if we go maybe to the 15 minutes or to the 5 minutes or to the 1 minute, now you see a lot more candles, and then that one alone looks like a whole swing structure. So when I say swing structure, I'm basically talking about like a move like this. Okay, so we see a whole swing structure. Meanwhile, on the 4 hour, it could just be one candlestick, like just one, maybe bullish candlestick like this, with this wick somewhere here, depending on when it closed or when it opened. Do you understand? So there's the same thing. This up move here, so this up move here is also equal to one bullish candle. Okay, if it's a down, let me if it's a down move, you probably see a bearish candle. So this would also be equal to one bearish candle. Let's change the color to red. Okay, so this would be one bearish candle with a wick above, maybe a wick below here. Okay,
Can you show me another example of that,
in the chart.
please?
Okay, all right. So let's go into it. Okay, so then let's look at the recent candles formed and then use that and clear the chart. All right, so we're on the 4 hour, and then coming to highlight this candle here, this bullish candle. Okay, and then we'll go through, look at maybe the 1 hour, 15 minutes, and then 5 minutes, and then see. So here, okay, and then let's go to the 1 hour. Okay, how many candles do we see? We see this candle breaking into our ellipse, right? And we see this one also breaking in. So these ones were okay. I think let me just make it one line and see if we could yeah, let me go to the okay, so it still locks on one candle anyways. All right, then let me okay, so here you can see the wick of this candle here sort of tanges on the it's like a tangent on our ellipse, and then this candle's body to somehow enters, which means they are just when you go to the lower time frame, you'd see that happening here. So this is it. So that wick is probably this candle here, and then this. So if we are looking on the 1 hour, on just for a 4 hour candle on the 1 hour, it means we need to have four candles. It means it should be 1, 2, 3, 4. But let's look at the time the candle was formed, and then we know. So this was formed at 2 p.m. Okay, so 2 p.m. It means the candle formed here. Okay, so 1. So it means this is it. If it started forming at 2 p.m., then this is the move. So this candle here, 2, 3, and then 4. Okay, 1, 2, 3, 1, 2, 3, and then 4. Okay, and then the next one, let's see the time the next one opened. So this one, yeah, so this one opened at 6. Okay, makes sense. So when we go back to the 1 hour, we're supposed to see four candles. And since the 4 hour opened at 2 p.m., that's what we have here. So that's this candle, this candle, this candle, and this candle. Okay, and this candle here will close at 6 because this would open at 6. So that's the next candle we saw. Okay, so this here is the number of candlesticks in that particular 4-hour candle. So this here is a bullish move, but you wouldn't. So I would look at this. There's an up move, right? Because price took out the high here again, but here it took out both the high and the low. So it could be a retracement before it went up, or it could have gone up before coming down. If we want to go into that, we can. So we know it's from 2 to 6. That's our range. So let's go to the 15 minutes and then look at that. Okay, so 2 p.m. is here. So it means this is the candle, and then 6. So this is the last candle. Okay, now you can see the move. Let me draw it out. So here we have an up move and then a little retracement. Why? Because this candle here took out the previous candle low, and then an up move, and then some retracement, then up move. Okay, so when I bring this out, yeah. So if I straighten it, we should have something like this. Okay, so just this 1-hour candle is a bullish uptrend. That 4-hour candle is a bullish uptrend in the 15 minutes. Do you understand what I'm saying? So with that, we can identify our swing points. We can identify here it will be our swing low, a swing high, then the retracement, then you get. Let's look at a different candle. So let's go to the daily. Okay, let's go to a different time. Sorry, different market. Let's see. GBP USD. I haven't been here in a while. All right. So this is another bullish candle. I want us to look at a bearish candle. Let's go to Aussie dollar, still bullish. Okay, maybe this one. Okay, so maybe we can look at this. So there's a daily candle. It means if we go to the 1 hour, we're supposed to see like 24 candles inside this one candle. Okay, so let's go to the 4 hour first. It means 4 times 6, 24. So we need to get 6 candles in here. If it's a 1 day, let's check the time the candle formed. Okay, so there's no time. Obviously, we know it's at 12 a.m. So we go to the 4 hour. We should see 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever. But yeah, so you can see a bearish move, and the candle should have opened by 12 a.m. So it should be here. This is a 4 hour. This opened at 9, and then between 9 and 1. So this opened at 9 p.m. and closed at 1 a.m. Okay, so it means at 12 a.m. there's some sort of, like, when you look at here, it means I'm sure you find the 12 a.m. in between. Okay, but let's just say we look at the candle from here to current where it is currently. So let's just say price sort of opened here. Is the candle bullish or bearish? Okay, so it's bearish, and this is the opening price 193. So in the 4 hour, 193 should be okay. So it means the opening is somewhere here. So it means that at 12 a.m. the opening was around this level. Let me go back to the daily, and then so the opening is here. Okay, this candle was open today 12 a.m. and then on the 4 hour, so when I draw this out, yes, so the opening was somewhere here. So at 12 a.m. price was currently here, which means at 12 a.m. this particular candle here was a bullish candle. Okay, but between 12 and 1, sellers stepped in. Maybe the candle went all the way to this point between 12 and 1, but getting to the end of the time frame. Oh, yeah, so at the 4 hour, getting to the end of the time frame, the sellers pushed it down, all the way down, all the way down. It ended up closing below its opening price. So it opened here at 9 p.m., but ended up closing here at 1 a.m. And then that's where the next candle opened at. So this here was where the candle opened. Okay. And kindly, this is where price is. That's why the candle is bearish. Okay. So, but because the market isn't showing it as, because I don't know, it's not really showing, giving us all that kind of information, but we can, based on the open and close of that daily, we could identify. So that's why we have a bearish candle here, because that's the open, and kindly this is where price is. And you can see in the from daily to 4 hour, we have like a number of candlesticks here. So if I was to draw this is the range. Okay, so this is the low, this is the low. Let me change this color to green. So this is the low, and then this is the, let me see if this, okay, this would be the high of the candle. Okay, so this is the low and the high of the candle for, okay, okay, so 5 a.m. Yeah, so we have the low and then the high of the candle. Now, if I was to draw this structure, I would use this. So come, price goes up, because what happens is that it keeps breaking. Let me take out the ellipse. Since the price is taking out the candle's high, which means it will be an uptrend in the lower time frame. So once it takes out the high, then it means it's going up. Okay. Once it respects the low, then it means it's a solid uptrend or a solid impulse retracement move in the lower time frame. And I've looked at how one candle would represent a number of candles in the lower time frame. I think the meeting will end very soon, but I wanted to go into the support and resistance. But after, so I'll send a link again so we do that. And then the next candle, same here. So this candle took the previous candle's high, which means it's still respecting, going up. Then the same thing happened here, took the high, respecting, still going up. And then what happened here, this candle here took the low, which means there's a down move. Okay, this could have been a change of character. If you go to the lower time frames, you probably see something like a change of character here. And then what happened, it kept going down, which means a downtrend now. So it was respecting the lower highs, so respected the lower high, respected the lower high. I took out the lower low here. And then this was a bearish candle. However, the candle rise after took out the high and respected the low. So here we can have something like a change of character again. So a downtrend